This is the tech company that had the largest impact from the pandemic in the second quarter. In fact, it was the first time that Google had experienced a year-over-year decline in revenue. And given the trends exiting the second quarter, management shared with us that they saw trends starting to pick up in terms of ad spend, which again was somewhat impacted by COVID-19. Seeing what happened with Google as the summer wore on and how their business is coming through this was critical. And that was a really good report across the board. I mean, you had a $5 beat on EPS. They crushed it on revenues, and really they're firing on all cylinders. Looks like ad spending is coming back. We're seeing that not only in Google, but in Facebook and Twitter as well. So a great report by Google. Cloud seems to be breaking out. They had expenses under control. So really celebrate what they reported.
I mean, Alphabet is up about 23% or so, maybe year to date. Believe it or not, that's a lagging stock among those big technology mega cap names. A lot of folks saying that this is going to be the catch-up trade, that Google then, I should say Alphabet, catches up. Is this the catalyst that gets Alphabet shares to kind of play that catch-up game with the rest of mega cap tech?
Yeah, it's a good question. And I think the answer is yes. As you noted, it's lagged behind the NASDAQ and its larger tech peers for the last little while here. I think there were two overhangs on Google that have since resolved and will probably allow it to catch up relative to its peers. That first overhang is, as I mentioned, the second quarter was surprisingly weak for ad spend for the first time in as long as I can remember, as I've been following the stock, and that's been a long time. And then second is the overhang of regulation. Obviously, the DOJ lawsuit, there was a bit of investor angst about what that was going to look like. And I think what we received from the Department of Justice was a lot more narrow, and in the case really that they've already fought in the EU. And I think the investors were relieved to some degree by that lawsuit. It wasn't quite as all-encompassing and targeted as maybe some had feared. So I think those two elements together have lifted on the stock. We had a great quarter again. YouTube looked really good in the quarter, and regulation looks maybe less burdensome than it would have maybe a month or two ago. So I think that's going to help Google play a little catch up here. All
right, let's talk about another hot button stock and company out there. Let's turn to Amazon. Its shares also under pressure this morning. The company reporting better than expected third quarter results, including soaring profits and 37% revenue growth. But Amazon is predicting $4 billion in COVID costs next quarter as it faces this unpredictable holiday shopping season. Amazon shares, they've been kind of like this ultimate beneficiary during COVID. Does that continue?
Yeah, we think it does. I mean, as you noted, they've been probably the biggest beneficiary of the pandemic. Their business is firing on all cylinders, whether it's e-commerce. We saw third-party sellers up over 50% in the quarter. First-party sellers was in the mid-30s, so e-commerce is doing fine. That's one of the secular tailwinds behind Amazon and why we like it. AWS, 30% growth in cloud, and operating margins, which I don't think is getting a lot of attention, went from 25% to a little over 30% in the quarter on a year-over-year basis. Advertising is growing north of 50%, so they're really they have a nice burgeoning business there. So really strong beat, like you said. Probably the big negative, if you could find one, and what was a really strong quarter was the guidance on operating income. But Amazon often has a wide range of potential outcomes because they reserve the right to reinvest. And as you mentioned, there's a number of COVID costs they're putting in there. So, I wouldn't let that worry you too much if you're an investor. Stick to really the signal here, and that is continued revenue growth and strong secular tailwinds for the company. One thing I will note, Dom, is that they guided on revenue for Q4 around $115 billion, which will be the first $100 billion revenue quarter in Amazon's history. That's a really big number. So it's something that's pretty amazing to see.
Well, the chart we're showing right now, Jason, shows a 71% year-to-date gain for Amazon already. So maybe a lot of that optimism is baked in at this point here. I'd like to kind of take us to Apple here, right? This notion that the biggest company in the S&P 500 is now disappointing when it comes to iPhone sales. Now, part of that is the upgrade cycle. People kind of put off buying the iPhone 11, waiting for the iPhone 12. But how disappointing are those Apple results, or is this a chance for people to buy on this dip?
For us, not disappointing at all. It's to be expected. I think we've seen this happen before with Apple ahead of large cycles. We have a pause in demand. They didn't even launch the iPhone in the quarter this time. Typically, it's September launch. This time it was October. So even Tim Cook on the call said you kind of got to separate iPhone in the quarter between pre-mid-September and post-mid-September. So there's a bit of an air pocket there that impacted demand not only in the United States but in China. But if as we look through this and peer out over the next 6 to 12 months, we think the 12 is going to be a super cycle for Apple, probably similar to what we saw with the 6, which was a large upgrade, maybe better than that. 5G, the better camera, the internal performance being upgraded, the lineup from the Mini all the way through the Pro Max looks really good to us. Early signs of demand look really good. So I wouldn't worry too much about the iPhone number. That's the rear view mirror. What you want to look through is the windshield, and we see a lot of growth coming for iPhone in this 12 cycle. So we're pretty excited. Stock's not expensive, and services, by the way, which is the growth story, and the wearables category both beat internal expectations at Apple. So we thought the quarter was fine.
Shepard Smith here. Thanks for watching CNBC on YouTube.